Hi, everyone. My name is Dustin Miles. I'm excited to have Todd Bailey here today. We actually both went to UT Austin. I think we were in buildings next to each other. We probably passed each other at some point, or probably saw you. But anyways, excited to have you here today, Todd. And if you could introduce yourself, and we'll take it from there.
Yeah, thanks, Dustin. Glad to be here. Thanks for having me on. I am, Todd Bailey. I spent 22 years in the semiconductor business and along the way invested in some real estate and really built a passion for this as an asset class. And so my wife and I decided within the last couple of years to become active and get our hands into real estate and build wealth that way, both passively and actively.
Okay, great. And I wanted to touch on it. So you were in the semiconductor industry for a long time. And what's your? I know you went to UT Austin, but what's kind of your educational background and your degree and all that?
Yeah, so I have a PhD in chemical engineering.
Okay.
I studied, um, well, and before that, I have a bachelor's degree in chemical engineering from MIT. Yeah, chemical engineering has a lot of different applications, and I chose to go into semiconductors. It's a field that really grabbed my attention.
Hmm.
22 years, I did some hands-on engineering work, optimizing processes, and then I got into team leadership and managed several teams,
Oh wow.
building teams, building processes, understanding what the internal company customers needed, and working out with my team, how to set the right goals and how to track the process of delivering on those goals and meeting the needs of our internal customers.
Gotcha. So not too different from, I mean, from real estate or multifamily in general. I mean, it's teams of people and processes and trying to make sure you're meeting the needs of your residents and staff and all that. So anyways, um so you were involved in real estate. Did you invest passively? Did you have some rentals? Like what did that look like for you?
Yeah, it started, I've been heavily saving through 401ks and IRAs, and I started to evaluate, this is kind of my motivation for getting into real estate. I started to evaluate returns in the stock market and looking at ways to get better returns. And of course, generally speaking, we're not educated on other asset classes.
Mm-hmm.
So once I began to find other asset classes, it opened a whole world for me. So I
Mm.
began investing in 2017. I invested a few $1,000s, a small amount in a private REIT, not traded on the exchanges, but
Hmm.
just to kind of test the waters and see what this asset class could do. And it's been performing, delivering as expected every month since then.
Oh wow.
My money is still there and it's being reinvested every month, right? So um, in 2021, I took a limited partner position in a flex space in Massachusetts.
Hmm.
They advertised, now I know the terminology. Back
Right, right.
then, I liked the look and feel, the look of the building. I liked the description of the project, and the numbers looked good and certainly better than typical long-term stock market returns.
Hmm.
And the advertisement was 11 pref and then some equity multiple over two, and I forget the exact number, but
Yeah.
it's been delivering, with the exception of a couple quarters, above 11 pref, 11% return, quarterly. It's an annual
Wow.
number, but every quarter since then. And the combination of those got me really interested in finding out more and actually getting my hands into ownership, owning a property. In 2022, my wife and I bought a small multifamily, a triplex here locally that
Okay.
we're still self-managing it. It's been a good experience, a learning experience, as you can
Yeah.
imagine.
Yep.
Uh, it's cash flowed, but we didn't really know going in. I listened to podcasts like Bigger Pockets and whatnot before then,
Yeah.
but we didn't really know how to look at a property and anticipate, especially some of the deferred maintenance issues and capex. And of course, there's going to be tenant turnover and whatnot. We kind of
Right.
expected, and it's been cash flowing, but I think we would go into the next property with a totally different view, right?
Mm.
Especially now,
Yeah.
and we'll probably get to it, but we've been through some coaching and mentoring and training on multifamily, and now we have a completely different perspective on how to approach properties. The building was built in like 1907 or something like that.
Oh, okay. Yeah. Yeah.
Fortunately, the previous owner updated plumbing and updated electrical,
Oh, that's
and
great.
so it was in really good shape.
Yeah.
But still, it's an old property. It needs TLC.
Yeah, yeah, absolutely. Yeah, I was going to ask how old it was, and anyways, but what so you've gotten some coaching, and have you been to any conferences? And I guess if you want to talk about your coaching program, was that for multifamily, and kind of are they specialized in any part of multifamily, capital raising or asset management or acquisitions?
Yeah, so we decided that we wanted to scale up and
Mhm.
not scale up in terms of buying more small multifamily. We wanted to get into larger multifamily properties. And this was sometime in the middle of last year. And
Okay.
sometime around that, something came across my feed about, come to a one-day event, learn about commercial size real estate, multifamily real estate. And I went, and it was amazing how much I learned for free in the one-day event, right?
Yeah.
And
Yeah.
then I realized, okay, if they're giving me all this information for free, I really want to see what happens when I pay for coaching. And so
Right.
we joined the multifamily mindset
Okay.
program.
Hmm.
It's a good program, really good foundation. Their infrastructure is solid. They have coaching teams, and I'm not necessarily selling them. There are lots of programs out there, but we've learned quite a bit through them.
That's great. Yeah, that's awesome. Um, and I guess for you guys kind of, I think you said you joined them about a year ago or so, or sometime last year.
Yeah,
Uh,
November we joined. Yeah.
okay, gotcha. So what kind of for this year and all of that kind of looking forward, what are do you guys have some goals? What does kind of this year look like, or just kind of plans for the future?
Yeah, so I guess I didn't finish answering your question. They cover really all of um the typical threads that a new GP
Okay.
need, like how to evaluate a property, how to do, basic underwriting.
Okay.
I'd say they go beyond basic, but how to do the underwriting, how
Right,
to
right.
do the asset management, working with the property manager,
Okay.
how to do the capital raising. And what we found after going through the program and talking to many people, and we went to, as an aside, we went to Peak Partnership a couple weeks ago
Hmm.
in Orlando, and that was really great, fantastic networking. And what we found is that the the value especially a new GP can bring to a deal, since they don't come in with the experience, the value they can bring is a property that has a business plan, or at least a
Hmm.
semblance of a business plan. What is the value add opportunity there, and some amount of capital. And so that's
Right.
that's what we're focusing on.
Gotcha.
We're actively looking at properties in southeast Idaho. It's kind of a smaller area, but
Hmm.
right next door to Jackson Hole, that's apparently overflowing,
Oh, wow.
and that's a growing area. And we're also looking at Texas, Houston, and San Antonio.
Okay. Gotcha. Well, if you have any questions about Houston or Texas or DFW, happy to help there. So, um, and I guess you kind of answered the question. Next question I was going to have because I was thinking I was like upstate New York, and you're wanting to scale into larger apartments. I'm like, it doesn't feel like New York. I don't know it very super well, but at least in my head, I don't think of a lot of larger garden style type of apartments. Is that correct?
Well, as a matter of fact, we just pulled a property report for this area, but we
Okay.
focus on smaller properties.
Okay.
We're selling our three family, and we plan to roll the equity into a small commercial size, somewhere like 8 to 10 units, uh,
Mm-hmm.
that we own and run ourselves. We're also looking at, as I mentioned, larger properties for syndication in other cities. I don't know. There are those kinds of complexes here.
Okay.
We
Gotcha.
have not investigated New York State. New York, parts of New York are very bad for landlords, although
Mm-hmm.
people still make money. For
Right.
us, we're not comfortable investing in some of those really, let's say, more challenging markets.
Yeah.
New York
Yeah.
City, Albany has a regulation. I understand they passed within the last year or two, which makes, let's say, landlording more difficult, right?
Oh, wow.
It's called good cause eviction. That makes it more difficult to evict tenants when they don't pay, et
Oh,
cetera.
wow.
Some caps on rent increases. And I think having reasonable rate of rent increase is okay until you go to add value to the property, and all of a sudden it's a basically a different property, and really
Yeah. Yeah.
should draw a different level of rent, and then those restrictions really put up roadblocks.
Yeah, I know New York and then LA, I think was trying to pass some other sort of rent restriction there, and which has put, a real damper on, multifamily developers don't want to go build because it's like I can't, my rent's really restricted. And I think it was I was the Twin Cities. I think it was, I can't remember if it was St. Paul or Minneapolis, but anyways, one of it, maybe it's St. Paul, but they passed a rent restriction of it was 2 or 3% per year, and they did so kind of during the building boom of 21, 22, 23, kind of that kind of era. And when they did that, no developers wanted to go there because they're like, well,
Uh,
we don't know if we can really make money, honestly. And so, what's interesting though, so out of the Twin Cities, I can't remember which one it was, but all the building boom went to the other city and nothing to the one with the rent restriction. And it's really too bad because it's hindered just growth in general, because that was a huge era for apartments kind of all across the U.S. Lots of kind of record just deliveries and all that, which you know, can be good, can be bad. There's, pros and cons to everything. But, for the renter's benefit lately, most of the US, we haven't been able to increase rents. It's been very flat and sometimes negative. Like Austin's been really tough down there. Um, and
driven by the oversupply.
yeah, yeah, and so which is it's good for good for renters because the rents aren't going up, they're staying flat or sometimes going down. So anyways, but yeah, it can, when you have those political pressures that kind of force a certain hand. I mean, if just from a risk perspective, it's hard to want to go place, tens of millions of dollars into, an area when you don't know, what's going to happen politically. So,
Yeah, the
um,
downside is still there, but the
yeah,
upside isn't there anymore.
yeah,
And
it's capped. Yeah.
yeah, and when expenses may tend to rise higher than that 2 or 3%, especially like insurance, then what's an operator to do?
Right.
Right.
Right. Right.
They're really squeezed.
Yeah, unless the city's going to cap the expenses too, then maybe that's a interesting dynamic. So, but so you guys are in the process, and what kind of are you guys? You're wanting to help. Are you looking at deals, and then you're also building your list and all that as far as being able to raise capital?
Yes, both. I would
Okay.
say we're now um, kind of in formation, to use a football analogy.
Mm.
We spent many months learning, just absorbing, learning, listening to
Yeah.
podcasts,
Yeah.
reading, doing exercises and whatnot, and now networking, and we're more aggressively looking at properties, talking to brokers,
Mm.
underwriting. We started off by taking some properties on Crexi and LoopNet, which are
Mm.
typically properties that are difficult to sell, and just
Right.
practicing underwriting using those properties, right? And it's
Hmm.
amazing, it allowed us to be creative a little bit and find ways to make a deal work, even if in the end, it didn't make sense to put an offer in on those properties. But now we're talking to brokers, we're looking at properties underwriting and also looking
Good.
at building our investor list.
Okay, great. Do you have, as far as the type of deals you're looking for, do you have a deal size or a deal box? I know you mentioned, I can't remember all the cities. I know you mentioned Houston, and there were a few other cities as well.
Houston, San Antonio, I'd say the greater Idaho Falls area. There are a lot of
That's
small
right.
towns there, and we through this Peak Partnership event, we met some people that are on the ground there that know the area very well. So they
Okay.
had some really keen insights. Uh, and we know a broker out there that we talked to, and it sounds like over the next however many years, five-ish, 10-ish years, many of those towns are going to grow
Mm.
and essentially merge the various submarkets, into one larger
Oh,
MS
wow. Okay.
centered around Idaho Falls.
Yeah.
So we're very interested. There's a lot of development there.
Hmm.
It's not clear how much inventory there is for a value add play, but we're looking. We have our eyes open.
Okay. Great. Yeah. I don't know if the person, I think he's in Idaho Falls. There's two people that are up there. I can't Senate, and I can't remember his last name, but I think I can't remember where in Idaho he is, but and then there's another Brian. I'm drawing a blank on his last name. I can't remember if he moved to Salt Lake or if he still lives in Idaho, but
Okay.
um,
Idaho's interesting because you have Boise and Coeur d'Alene on the west side of the state, which are
mhm.
very expensive.
Yeah, yeah,
And then you have, Pocatello and Idaho Falls and Shelley and those towns on the east side that are more reasonable, have more reasonable cap rates. So
yeah.
that's really where we're looking. There's actually maybe an opportunity to put a business plan together.
Awesome. Yeah, that sounds great. In terms of you know, uh, what are you looking for as far as potential partnerships? And, are any characteristics for the people, or are you wanting those people to be your boots, kind of boots on the ground since you guys live in New York, or what sort of, just, what's kind of your checklist for, potential partners?
Um, just adding to the previous topic, I didn't finish the buy box. So we're looking, we started looking at 50 to 100, 40,
Okay.
30 to 100, and there seems to be opportunity in smaller properties. So we're now looking 20 and up, 20 to 100. And it could be
Okay.
larger. It really depends on the sponsor team that we partner with. And in addition to Idaho, Houston and San Antonio are on our radar.
Okay.
And we'll look
Gotcha.
elsewhere, but this is where we have bandwidth at the moment.
Yeah. Yeah. Gotcha. Okay. Yeah,
And
and then I guess the last question, in terms of partners and all that, do you kind of have criteria or checklists of things you're looking for there?
Yeah, so I, obviously we need, since we're very new to syndications and
Hmm.
I'd say still say even though we've self-managed, fairly new to real estate, we are looking for partners that have experience, a portfolio that where they've exited a certain number of properties, not
Yeah.
not not just still in the hold period for the whole portfolio.
Mm.
That's critical, right?
Yep.
Um, there, we've started talking to sponsors to find out where there might be, let's say, alignment of values and
Mhm.
goals and in some cases, hey, we like each other, but maybe there's not a great fit, and that's fine,
Yep.
right?
Yep.
I generally speak, some for various reasons. We want to add value in addition to,
Mhm.
and I think if, once we're raising capital, we absolutely have to add value during the hold period. We can't just bring a deal and capital and kind of sit on the sidelines.
Right. Right.
With our W-2 experience, we have skills to bring to the deal to make sure the business plan is executed as planned and help do some brainstorming and recovery if things start to take a turn.
Gotcha.
So
Okay.
I absolutely want to be part of that, a very active part of the whole process from start to finish.
Awesome. And then are you is this kind of right now doing this on the side, and are you guys still, are you have your W-2s right now, or what does that look like?
My wife has her W-2.
Okay.
I don't.
Okay.
I chose to exit the corporate world and do this full time. So
Okay.
I'm
You're all in.
I'm all in.
Yeah.
It's one of those things where you can dip your toe in, and if it works, great, or you can just make sure it's going to work. And
Right.
that's the route I'm taking is we're going to make this work.
Yeah. Yeah. Gotcha. Okay. Awesome. And where I was curious, where does the name of your company come from?
Anchored Northern Investments. Yeah, so we wanted a nautical theme
Oh, okay.
and
That's cool.
anchored. So one of the things we focus on, and we're LPs several times over,
Hmm.
and the most important thing for me, and I suspect the most important thing for any LP, is preservation of their capital investment, right?
Yep.
And so that's
Absolutely.
really what the anchor in Anchored Northern inspires is kind of grounded preservation
Solid.
of
Yeah.
solid preservation of
Hmm.
capital.
Gotcha.
And Northern, this we want to scale, we want to help our LP scale, and that's kind of the North Star. So
Awesome.
yeah.
Cool. How do people get in touch with you? What's the best way to reach out to you and chat with you and yeah, potentially invest or work with you?
Yeah, absolutely. We have a website, anchored northern investments .com, and or LinkedIn, Todd Bailey, PhD, or Anchored Northern Investments on there. We have a Facebook page. We're fairly active, kind of all over, so people
Okay.
can look for me there.
Awesome. Well, great. Well, yeah, appreciate your time today, and please reach out to Todd. Super sharp guy. And yeah, appreciate your time today, and look forward to talking soon.
Thanks, Dustin, for having me on.
All right, thanks, Todd. See ya. Bye.
Okay, bye bye.